Good day all. Ira Epstein of Linn Associates with your financial market wrap-up for this Tuesday, the 26th of November, 2019, just after 4:40 p.m. Central Time. I will call it that. Depends where you're at. Okay. If we look at the market, you're in what we call a melt-up. What is a melt-up? It doesn't matter the news that comes out. The market views everything for 10 seconds and goes. It's the guys that think they're going to be forgotten that are all, I think, just rushing into the market. You're setting new highs in a number of these indices. It doesn't matter if the gold market's going with it, the dollar's not going with it, or interest rates are falling at the same time. We keep hearing impeachment talk. As I understand it now, it could be as soon as December 4th that the Judiciary Committee is going to start hearing against the president. We'll see what they bring to the table, but this market's just chewing right through all that information, and it's on its own path and the trajectory up, and you can see it. These are now, you're up for the week, 32.25 points. You have one full trading day left, and after that, we have only a half day on Friday. You'll have some electronic trading, but it's going to get very, very thin until next week. But what a move. This market has gone literally since the last break low of 28.55. We have moved up for all purposes 300 points in this market. When you look at the S&P, you can see the new highs in the move. You can also see that the swing line's got the pattern of higher lows, higher highs. What I had told you the other day is held, I think, true. Taking out this 31.14 level, even with a lost embedded reading, we'll get to that in a minute, seems to have been the key to this market to propelling it to higher areas, because you caught a group of people, I think, in there that were getting a little bit bearish. As you see, you're over all the key moving averages. Now you're taking up this last average, the 18-day, and it's over the last break low, and it's going to climb again tomorrow on you. Where's the resistance? Right here, right now. You hit the upper Bollinger Band. The first time you hit it, what I teach at least, is that's where the pros take some money off the table. Then on the pullbacks, as long as the trend stays up, they'll be fairly aggressive. What happened here? If we come to this lost embedded reading, that is often the time frame that a market will try, and it was lost right here on this day, when it most often makes a run at the 18-day average of closes. It goes for either that or the closest of another moving average, and that other one's way down here. So that's not the key. And we had an attempt. It didn't work. What should not happen, in my opinion, is taking out the 31.1450 level, and when that's taken out, you catch this group. And when you catch them, especially if you got the higher lows, higher highs, you're putting into play either whatever average is above the market, none of them are that are important. That's the 100, that's the 200, or the Bollinger top, and that's what the market seems to have wanted to go to. It hit it. I won't back off what I teach, even with the melt-up that's going on. I think the pros will take some money off there. Same in the Nasdaq. You had lost your embedded reading. Now, this is the only one of the major indices that actually got down to its number, hit it. Then the key is if you take this number out, which you did, you've laid the bear trap. But it did allow the pros to come out. And why come out? Because the bias, this is a bias line. That's a way to look at it. When the market's over it, it's got upside, under that 18-day average, downside. You challenged it. You'll hear me say it's the line in the sand over and over. Now the only number I have above the market's the upper Bollinger Band, which it's hit. The odds of staying over a Bollinger Band 5% of the time. Now, I count each successive day over it as one of those 5% numbers, so 4%, 3%, to be the key. You're only the first day over it. In the Dow, haven't quite got there. Wouldn't be surprised that you do. The market's number for resistance, 28,193. It's hard to believe that this market just keeps adding hundreds of points at a time. Another 91 higher today. And again, a bear trap was laid. You lost the embedded reading. You missed coming back, and you just moved up. And this one's a little different because it didn't get the same type of pattern as we did in the S&P. And if you take out the 28,128 level, which you did today, you just caught that group right through there. Again, the bias has been up, but more times than not, when you lose an embedded reading, you get an attempt at that number. Didn't happen this time. In the Russell, new highs. Finally, at year-end, this market saying, I want to join the parade. And it's joining the parade to the upside. Yes, it's overbought. Second day in a row over the upper Bollinger Band. We'll see on this move how far it can go and whether or not it can go for all-time highs. Hard to tell, but the Santa Claus rally, as I call it, it's in play. I don't know what could backtrack on this market. In the VIX, I still think the pros wrote some puts against the VIX today. It was if you take a look yesterday at 1187, the first time it was hit, down today to 1154. I think they're looking for no more than the 18-day average right now. Are we trending? No. Could this be a breakout of this sideways action? You have to have your eyes wide open. It certainly could, but every time the VIX from the 12 level, 11.5 level, it's had a hard time mounting a big decline from there. Could it happen? Anything can happen in markets, but that's still what I think the pros are doing. In the T-bond market, at the same time that the stock market is going, so is this market. You're into this in the 10-year note around 174 at the end of the day? Look at this. Now, the 100-day average is the number that's been in play. It's not the 18. In fact, if you were to take out 159.13, you'd break this pattern of higher lows, higher highs. If the market can move higher, the next resistance point, 161.15, and while it's not up at these old levels, like in the, when we got up to down to the 144 level in the 10-year note, and I am talking about bonds, it's still very important. What's this doing? It's probably going to help the housing market in some degree. When we take a look at the 10-year note, I'm going to say the 100-day average is the key number there. If you can punch through it and stay above it, you might be able to get to the 130.06 level. I don't see enough in this market to get back to those old highs with an overbought condition. But this is a market that's just saying, at the end of November, everything's going. Can't argue with it. TLT, same thing. Since this market held and played around this 18-day average, it went up, played a bit, just a small amount at the 100. Next zone, if it wants to continue, and it is overbought like bonds and notes, 142.08. If you take out 139.12, we're probably going to go into something of a pause, at least you are in terms of the swing line. In the dollar index, overbought condition, uptrend. Doesn't seem to have the wherewithal to want to make that run to the 98.50 level just yet. We'll see if it can. And when you come to the eurocurrency, traders all over are saying, oh boy, the 110 level, if that gives ground, what's next in this currency? And at this point, a higher high, lower low, that's about all that I see. Oversold condition, pretty rough call to try to figure out what to do with that. The pound is still down, but if you take out the 129.20 level, you probably negate that pattern. If the market can take out today's lows, 128.05's in play. Do you notice this massive sideways action that's developing? It's generally the prelude to something bigger going to happen. It's like prices winding up in a pipe. Think of that. That's a pipe inside. And it's trying to figure out the pressure as to where it goes somewhere. And trying to make heads or tails when you're going to get thinner trader, when all the American markets are already winding down, that's going to be difficult. I'm not saying you can't get pops like that, but I'm in a building where it's pretty empty. If you look at the yen, it's still bearish, and bearish means the market's abandoning what the idea is that it needs a safety net. You saw that in the VIX too, is this market's breaking down with lower highs, lower lows, momentum down. The 91.58 level, the lower Bollinger Band, is offering an idea of where some support might be. It was there before and then bounced. That's about all I can say about it. Bitcoin, I've been looking for the market over the past few days to get back to the right-hand side of the Bollinger Band, which it's done. That's all it's done. It's a correction of getting ahead of itself, but the trend is down, and until you lose the embedded reading, and by the way, I've switched you over to December Bitcoin now because the NOV goes off the board on the 29th. you're still very bearish in this market. In the Brent versus WTI crude, look at how this market's popping to the upside, and you're seeing all the energies pop. I think the market's looking at the stock market. It's trying to figure out what does it do. I didn't see anything out of the API that was out of line with the marketplace, but yet we're still moving to the upside in an overbought condition where the resolution has been where the market's gotten up to these Bollinger tops and sort of fails. I'm going to repeat what I just said. Trying for me to make heads or tails in the last full day of trading before Thanksgiving, difficult at very best right there. In the WTI crude, it confirmed an uptrend, higher lows, higher highs. Prior to this, all we had was the higher high, the lower low, but with today's rally, you put into play that possibly it wants to go to that upper band. We're going to get the EIA number in the morning. That'll give us an idea of where this market wants to be. Gasoline back to the upper Bollinger Band, where once again, I think pros will take money off the table, not add to that. In the nat gas, look at the collapse that you've had in this market. You know, I was just looking out west to see the massive amounts of snow, rain, and it's a whole swath. I mean, it goes, Denver's washed out for the holidays. I'm watching how California's doing, Arizona, all the way down to Mexico, but that's not the East Coast. We're due to Chicago to get 60-degree winds tomorrow from the storm that we're missing, but it's really going to slam the north. And when you get a lot of snow, it's colder. Where's the demand? That's what I'm looking to see. Haven't seen it just yet. This is peaked out on the first, remember that early November cold? It drove it up, and then the market's washed out literally the whole move that it made. You're back into a support area. I don't know that the bears want to get super aggressive at this price, down into an oversold area that's very close to that lower Bollinger Band. So as I said, I've done a special report, and I did it on the gold market. I've covered for you in detail this time the price counts, seasonals, the 15, the 30, the 5-year with the help of more research. I've covered for you weekly charts, daily charts, and to me the importance is I see a two-prong attack on gold. I see the market coming up, and we're in that seasonal time frame where the market generally peaks out up here, pulls back, and then the question is what happens right after that? View the report. It's a video report. All you do is go to our website, www.iraepstein.com. When you get to that part, go to research at the top. You'll see special metal report. Click on it. Enjoy it. I'm Ira Epstein. You have a good day.